Okay, guys, today I'm going to go over something called dollar cost averaging, and we're going to use two other things that are very misunderstood. One is the Wycoff method. The Wycoff method is effectively averaging down but doubling down each time you average, which is incredibly dangerous, and you should never, ever, ever, ever do it. Okay? Never do that. This is a little different. You are going to average into a position using Elliott waves and exhaustion, okay? And your targets are going to change throughout the trade depending on how far you go into drawdown. And I'm going to draw this out very easily for you. So first and foremost, you need to understand that you may go into some drawdown, and your max drawdown on your first position is 1%, and your total position is 2%. In order to make sure we almost never get stopped out for the full loss, we want to use small size, but this will make sure that you win almost all your trades and you will never go into massive drawdown doing this. So although you make smaller profits, you will be able to pass challenges quite easily doing this, okay? So here's a simple strategy. So for my strategy, right, I'm going to play a rejection of an uptrend in the overall downtrend, right? So I am looking for a continuation. We have a downtrend and we're starting to aggressively move back into order blocks. Okay, so we have a high, a high, a high, a high, a high, 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 and a high. Two order blocks, right, where it was rejected from, and now price is moving back into it. Okay, so what we want to look for is exhaustion, aggressive moving into an order block, and then we want to look for a pivot. And as we get that first entry, we're going to sell, if you have a 25K account, one lot. Okay, and you're going to put your stop above here, just like this. Okay, so that's your first entry. And the way that we use this is you're risking no more than 2%. Your first entry on a $25,000 funded account will be one lot. Okay, meaning that this needs to be a $250 loss or less. Okay, so we enter risking $250, and all we're doing is we're anticipating that we're going to break the lows. Okay, and then what happens? As this pushes up, it pulls back down, and we enter. Okay, so our entry is here, and then what happens? It pushes up again. So this time, we are going to sell 0.2 to 0.25 lots. Okay, and we are also going to target right here. Now, it goes up again, and as it starts to reject this time, you add a third time, 0.2 to 0.25 lots with the same stop. But now this is how we make sure that we can get out of the trade. Because we have Elliott waves, and Elliott waves are effectively just, you're looking for exhaustion. An Elliott wave is a 5-point move. So you have 1, 2, 3, 4, 5, and now the trend should slow down and we should have an opportunity to pull some liquidity. And this is how we trade, okay? If that pullback doesn't break any liquidity and instead continues higher, then we are going to go into drawdown. But that's okay, because eventually we will pull on some liquidity. So how do we make sure that we're getting out for profit? Okay, so as it pulls up the third time, we can either dissect this trade by 0.25%, or we now need to move this trade up to break even. Okay, we've added twice, so now this needs to get closed out for break even. Now, if we add a fourth time, right, it pulls up again a fourth time, then we need to make sure that one of our entries is in profit as much as this entry is in drawdown, and we will close out both of those to equal a 0 net profit. Okay, so if it pulls up a fourth time and rejects, and we have the same stop, okay, again, we're selling 0.2 to 0.25 lots. Okay, and now because this is a greater entry, we want to dissect the amount of points between this loss and this. So as this moves down here, if we're up $30 here and down $30 on this one, we will close out both of these trades. Okay, so now we're just in these two, and now we're currently, right, winning. So now we've pulled liquidity. Now if this continues higher, right, we can add to the position, and because we're in smaller positions here, we don't really need to worry too much about the drawdown. Okay, so as this starts to pull liquidity, it doesn't pull and it doesn't break down completely. We start to adjust our targets. Okay, so now we're adjusting targets. We have the first level of liquidity and we want to target at least 2 levels of liquidity. So now our targets have been adjusted. We're break even on this trade now, and now we have the ability to get out here. It pulls up again. Because we're not in over 2% drawdown, we do not need to stop out of these positions, right? We're not going to be down that much, but we haven't gotten a significant pullback yet. So that means now I'm going to start doubling these position sizes. So as this pulls up again and starts to fail, I'm going to sell 0.4 lots, double of what this is, and I'm going to have my target at a pull on this second area of liquidity, okay? I'm still expecting a breakdown of this level, okay? Instead, it goes up higher again, and now I'm going to sell again 0.4 lots as this starts to fail with the same target, okay? If we have not taken out any liquidity on a multiple pivot run-up, eventually we will take out some kind of premium liquidity. And that means wherever that last aggressive push up was. So as this moves down, which it inevitably will, right, you will not take massive losses trading this, right? Because we are protecting ourselves. We are hedging our position using Elliott waves, dollar cost averaging, and the Wycoff. So as it moves against us and pulls back down, and against us and pulls back down, right? Once we get a chance, if we are in drawdown, right? If this actually just turns right around here and dumps, then we make a big win on our first entry and the trade's over. But if it pulls up against us, now we're trying to protect our profits. So understanding that inevitably one pivot will sweep lows, and that'll be enough to get us out of a position for break even if we're in big drawdown on one position and we're in decent profit on the other. As it meets in the middle and you're up 30 on one and down 30 on the other on your biggest loser, you close those two out to net a 0 profit, right? And then we continue waiting for primary liquidity to get taken out. And now we finally get a final pivot here, and it does start to go down. So now we can add again 0.4 lots, right? So now we own 1.2 lots here and 0.4 between these two positions that we are in drawdown. And as this starts to come down and it breaks primary liquidity, we can close this trade out, this trade out, this trade out, and this trade out, all for a profit, probably netting you somewhere between 1 and 2%. And then we keep at least one trade on because we finally pulled a primary liquidity level. We leave one trade on for an attempt to break the lows. And in my experience, this will continually make you money, okay? Because when we do actually pull lows, that's a big win, and you're hedging your losses here, and you almost never have to stop out because you're using incredibly low size. Okay, so now let's get into the actual live examples. Okay, guys, so here we have all of our levels checked out, excuse me, and I want to run you through what this is. This is how I trade when I want to take reasonable wins and just pass challenges, okay? So simple order block, right? We have liquidity retest, an aggressive sell-off, and then we start having aggressive buying into a downtrend. So an Elliott wave is a 5-point move that triggers exhaustion. Okay, so we have an aggressive move, point 1, pullback, point 2, 3, 4, 5, and we sweep liquidity level 1. So now we want to start looking to take trades. And obviously you can see here we did get the rejection. We'll show you how to play this. So we are going to assume that we're going to sweep low. So as it pulls liquidity here, I sell. Okay, and I'm going to put my stop above the order block high, one lot, right? So here we're risking 250 to make a little bit more, 1.65. Okay, so this is a great RR. It's a really big trade, and we'll most likely have the opportunity to adjust our stop. Okay, so as we go up and we pull liquidity level 2, we sell again. As it starts to fall down, we sell again. Same stop, 0.25. Okay, so a smaller amount of money. Same target. Okay, then it pulls liquidity level, the high liquidity here, and as it starts to reject, we add to our position 0.25 lots. Okay, but now we've started to go into drawdown because it's actually continued higher a third, fourth time. Okay, so as this starts to reject here, I want an opportunity to get out of my first position for a break even. Okay, so now I am potentially down. Okay, 43.6 points, we'll just call it, because there are so many numbers on this. It's actually 0.436. Okay, so I want to find a position where I am up at least enough to mitigate this loss. Okay, now because this is a smaller position, I need to get this position almost down to somewhere in here underneath these lows for that to match it. So I'm going to say once we interact with liquidity level 2, I'm going to close this out for 181 point loss, and I'm going to close my big winner out for a 251 point win. Okay, so this should net me a very small loss at this point. Okay, as it starts to fall, again, I sell 0.2. And in this example, right, it comes up again and then fails again. So now we sell 0.2 again. So we have 0.8 lots sold. And now we need to adjust our targets to make sure that we can actually get out. So now we have an aggressive push up and an aggressive buy bar. So this is the location I'm going to look to take my primary profits, because this is where the new liquidity is sitting, right? All these buyers have pushed the market higher, and there is a lot of liquidity under this level. So I'm at least looking to get out here and potentially a break low of the order block or the interaction with liquidity level 1, okay? So now as this pushes down here, I close this trade out here, and I close this out for a loss. So now I'm net zero on the day, and I have 3 trades. And as we move into my primary target, my new adjusted target, I have the ability to move all my stops up and adjust my risk to reward. And as we interact and break through this level, I get to close this trade out for a small win. I get to close this trade out, right, for 0.74 my risk, right? So that is a decent win. And then we have this trade where we close this out, probably 50% of it, or the entire trade out, and we've made quite a good return on this trade. So we were break even because we were wrong, right? The market did not continue. Instead, it reversed and it continued higher. So we were wrong, but we were able to get out for break even on our first larger entry and for a decent, probably 1 to 1.5% profit on our following entries, right? Before it finally came up and it broke this high. And now we can look again, exact same structure, right? Aggressive run up, 1, 2, 3, 4, 5. We have exhaustion. We can sell here, right? Anticipating that we'll be able to get out for a really good win if we pull these lows. And what happens is it actually continues higher. We adjust this to a 1-to-1, right? And as it pushes up and fails this time, right, we're able to add into that trade looking for a pull on liquidity. And now as it pulls primary, which is here, we can stop this trade out for a decent win or pull on this secondary liquidity for an even better win. And this we're in major profit with. And at this point in time, we could potentially look for a pullback, assuming that it's going to continue lower. And as it starts to pull back, add back in with one lot for that big move back down. And as we start to get that pivot, and then it corrects and starts to continue down, as it breaks the low here, we are able to move all of our stops up to now this pivot, which means that we'll break even on this trade, actually in profit if we get stopped out, and we will only take a very small loss on this trade in the event that it goes and breaks down our primary level. And now we have a 6.46 to 1 RR trade here. Okay, so again, you want to mark out your order blocks, you want to mark out the liquidity levels, understanding that there is going to be stops above these pivots. If it pushes above the pivot and you sell, and then it continues to the next pivot, you continue to sell on smaller lot sizes. And as you get a pull on a new established liquidity, let's say it doesn't just immediately react and fall, it continues higher. We have established liquidity right here. So as we push higher, I am going to bet that we are going to at least pull this before we continue higher, because the market makers need to fill enough liquidity to continue the market higher. All right. And this is a strategy that I've used multiple times to pass challenges, okay, to get funded. If you guys have any questions or comments, please let me know. This is a very, very simple way to trade the market where you do not have to risk a whole lot of money. You can make small, consistent profits without ever having to risk blowing an account. Okay, and you get to be right like 99% of the time. You almost always have an opportunity to get out. All right, there is that on point where it does just go through all your stops, and unfortunately that does happen, but you're only risking 2%. So if you are extremely wrong, most of the time you can get out making 1% or maybe 0.5%. It'd still be profitable, even though you were very wrong. And that is the best way to trade as a new trader. Okay, you don't need to make 10% on a trade. You need to not lose a lot of money on a trade. And if the majority of time you give yourself the opportunity to get out for a small profit or break even, you will eventually be able to take 1%, 2%, and 5% wins. Okay, but in the event you do go and draw down, there are ways to get out of it, and that is how you use dollar cost averaging and the Wycoff method, okay, in conjunction with exhaustion patterns like Elliott waves. Okay, 1, 2, 3, 4, 5, exhaustion reversal. Okay, you see it over and over again, right? 1, 2, 3, 4, 5. Okay, doesn't dump this time. Instead, you get an exhausted move up, which is even juicier. And as it rejects, you can sell here. Great risk to reward to come in and take these out. Okay, take out all those stops. Okay, guys. So if you enjoyed the video, thank you so much. Please like and subscribe. I love you all. And start leaving me some more comments because I'd like to, make videos that are a little bit more customized to my audience. Okay. Peace out. Take care, guys.